Hello guys, I'm Paris the Options Guy and welcome to the No BS Trading Podcast. I hope you guys are doing great. This is episode number 27 and today we are going to discuss what RBI did in its interest rate decision, and then we are also going to discuss how the next week's US inflation data is going to decide if the Fed is going to cut rates in its December meeting. And then we are also going to discuss three new IPOs that are coming in our markets next week and if you should apply to them or not. And then in the end we are also going to discuss how the markets can move on a technical basis in the coming week. So do watch this episode till the end because it is going to be an interesting one. So yeah, without any further delay, let's just start with the episode. Now, first of all, talking about what happened in the previous week, starting off with Friday. Before that, we didn't really have anything that happened in the previous week, which was important to talk about. So on Friday, we had the RBI's interest rate decision. And as I said in the previous episode, you can go and watch it. RBI will disappoint the markets, and they did disappoint the markets by not cutting interest rates and keeping them stable. But they also made the markets happy just shortly after by doing something else. And that was reducing the cash reserve ratio by 0.5%. So they decreased the CRR from 4.5% to 4%. So what this will do is that this will enable the banks to keep a little less money as a safety reserve with themselves or with the RBI. And so this move is expected to put in an additional around about 1.1 to 1.2 lakh crores of liquidity in the whole financial system. Now this might sound very big, but it is not like a very big thing, right? It will definitely have a bit of an impact in the overall liquidity of the system, but it will not have like a very huge impact. And that's why if we go and see the charts of Bank Nifty on Friday, you will see that as soon as the RBI governor said that we are not going to, decrease rates, Bank Nifty fell, right? And then after that, shortly after that itself, you will see a very fast recovery in Bank Nifty. And that was when the RBI governor said that they are going to reduce the CRR from 4.5 to 4%. So yeah, that was one thing. And then in the evening, we had the US unemployment rate, and the unemployment rate came out at 4.2%. Expectations were that it would come out at 4.1%, but it came out slightly higher than expected, not really very much higher than expected. And that's why if you see, markets didn't really react so much. The US markets didn't really react so much to this data point. But as I've said, that we can see a very good spike in the US unemployment rate for the last, you can say, a few months, right? And so I am still expecting a little bit of a spike that can come in the US unemployment rate soon. But yeah, let's see. Maybe I might be wrong, but I will let the data prove itself. I will not tell you if it is right or wrong. Okay. But yes, that was what happened in the previous week. Aside from that, nothing really that was important to talk about. Now let's move on to the the events that are going to happen in the next week, which are going to be important and should be given attention to. Now, next week we have, first of all, the US CPI data, which is going to come out on Wednesday, and the CPI is expected to come out at 2.7%, around about 2.7%. So previously, if you see, CPI came out at 2.6% in the previous month, and before that the CPI came out at 2.4%. So the CPI is definitely rising, and if again on Wednesday, if the CPI comes out higher than expected, chances are the Fed might not cut rates in the December meeting, which is going to happen, if I'm not wrong, on December 18th. But again, very soon, right? Mostly in the next week after this. So CPI, as I said, expectations are 2.7%. So if it comes out a little higher than that, or if on a month-over-month basis we see CPI coming out a bit higher, then definitely things will be bad. And I think then the Fed might be forced to pause its rate cuts that it is going to do. Again, as I've said, that the last two rate cuts that the Fed has done, they were completely useless. There was no need to cut rates and the Fed still cut rates, and because of that I think we can see an uptick coming in CPI again, and the Fed might not might again lose control over the CPI over here. So anyways, CPI expectations 2.7%, core CPI expectations are just 3.4%. And also you should look at core CPI, because again, core CPI never even has gone below 3%, right? So that is again a concerning thing. Okay, CPI, going below 3%, good thing, but core CPI has never even gone below 3%. So you should look at it in a way that core CPI is still out in the wild, and it is still much higher than the target that the Fed has planned for. Okay, so that is one thing. On Thursday, then we have the PPI numbers, producers price index, something like wholesale inflation, you can say, inflation for wholesale goods, right? So previously, the expectation, and now there are no expectations as of now. I could not find any expectations that the market is keeping, but anyways, previously it has come at 2.4% in the previous month. So this month again, probably you would expect at least to the PPI progress to, like, just stay stable, PPI numbers to stay stable at 2.4%, or even go down. That would be good for the markets. But even PPI, if starts to show a good rise, right, maybe coming out at 2.6%, 2.7%, then that will be also very bad for the markets, and this can also force the Fed to stop its rate cuts. So these two data points are very important, because after this itself, very soon we have the as I said, the Fed interest rate decision. I think most probably it is on December 18th, but maybe December 18th or 19th, one of those days. But yes, after this itself, we have the Fed's interest rate decision. So these two numbers will carry a lot of weight in deciding if the Federal Reserve decides to do a rate cut again in the next meeting. So that is it for the next week. Aside from that, I don't think we have anything else which is important. Yes. So now let's move on to the three IPOs that are coming in our markets, and if you should apply to either of them, and invest your money in them. Now talking about the three new IPOs that are coming in our markets. First of all, we have the Vishal Mega Mart IPO, which is going to start on December 11th, and this is a hefty 8,000 crore IPO, which you would not expect from the naming itself, right? You would not expect something like a Mega Mart chain to raise 8,000 crores. But anyways, it is raising 8,000 crores. So we will focus on what is coming after that. Now this is completely an offer for sale issue. That means the promoters are selling their stake and no money is going to go in the company. So is this a bad thing? Yes, it is slightly a bad thing, because you expect at least some money, or some of your money, to go into the company, so it can be helped to at least like expand or do something. But no money is going into the company. But yes, let's talk further and let's see what should you do. Now first of all, talking about from the listing gains perspective, should you apply just to get listing gains? And the answer as of now is you should wait and watch, because as of now the listing gain is 21%, and if by the end of the IPO, which is if by 13th December, which is still a week away, if the listing gains go up till 40%, then you should think about investing just for listing gains. But until then, if the listing gains continue to stay low, then ignore for the listing gains. But should you apply in this IPO for investment purposes? And the answer to that is, let's first of all look at the financials, and let's look at what the company does. So the company is, as I said, a hypermarket chain. It has retails, you can say, chains, like you have DMart, right? Some similar to that, you also have stores which are named Vishal Mega Mart, right? So it sells apparels, groceries, electronics, and house appliances, home essential things, home essentials which you would use at homes, right? Similar to DMart again. So the company mainly focuses on middle class and lower middle class demographic. Okay, it does not service the higher middle class, or like higher middle class, or the higher class demographic of income people. So as of now, the company has 645 like these mega marts, or you can say like hypermarkets. So it is spread across 414 cities in all of the 28 states of India. So this is a good thing that the company has a pan India presence, you can say. Now how did the company make this pan India presence, you would ask? Like opening such big stores, and 645 of them would be very capital intensive. And you would be right, but the company's business model is actually a bit different, because what it does is that it leases all of its distribution centers, and all of these centers that these stores, right, these stores, the big stores, it takes them on a lease. It does not outright buy them. And that is why it does not need a lot of capital to operate all of a sudden. And then at the same time, it also has third party manufacturers, which can third party manufacturers and sources from where it can source its products, right? So that is the reason why it has an asset light business model. And this is something which I really liked about the IPO when I was researching about it, about the company when I was researching about it. So this is a good thing. Now let's look at how the company has performed in the last 3 years. If you see, in FY22, 5,600 crores of revenue and profit after tax of 200 crores. Again, the net profit margin, if you see, is very low, right? It is close to somewhere around 4%. And you would think this is bad, but even if you look at DMart, their net profit margin is not also like very big. So these type of you can say companies, right, be it DMart, be it Vishal Mega Mart, who service the middle class and the lower middle class, their profit margins are pretty slim. You have to understand that, because they are at the end of the day providing cheap things to people who do not have a very high income, right? And so they also have to squeeze out their own net profit margins for that, so that they can provide their offerings for cheap, right? So in FY23, the revenue jumped to 7,600 crores and profit after tax also jumped to 320 crores. So profit after tax jumping at a much higher rate. Now this indicates that the efficiency of the company is increasing. Okay, so in FY24, if you see, 8,900 crores of profit, 8,900 crores of revenue and 460 crores of profit. So again, a very good growth. And in the first half of FY24, they have already done 5,000 crores of revenue and 250 crores of profit. So you can expect, if you annualize that, you can expect 10,000 crores of revenue for FY25 and 500 or a little bit higher crores of profit after tax for FY25. So again, expected to continue this growth. So should you apply to this company if you want steady returns and not like completely like bonker returns or like completely very, like extreme rapid growth companies? Then you can definitely apply for this. This company comes into a defensive sector. And so the whole industry that it is in, it will perform, it is like sort of an evergreen you can say business. This business will not go down in a certain quarter or something, because people need stuff, daily essential stuff or home essential stuff, be it apparel, be it electronics, all that stuff, from like like year round. So this is a business which can definitely be a very stable business for you to add on to. Now, is the IPO completely priced well? Is it priced very expensively? So in my opinion, the IPO is priced well. The post IPO P is at 69, which again is a good P. It is not really very bad, considering if you see Avenue Supermarts, DMart has a P of 98 as of now. So again, even cheaper than Avenue Supermarts. And yes, they also have a bit more presence. They have a bigger network, so that's why they can also command a bit higher PE in the market. But yes, the IPO is priced well. It is not priced bad at all. So definitely something which you can invest your money in for the long term. And this is a company which can definitely keep your money steady. Like the chances of this company going bankrupt, yes, there are chances, but it's like a company which it's like a defensive sector. When the economy is in a downturn, it will not face like a very big sort of a very big recession in its own profits or revenues also. Yes, it might face a bit of a slowdown also as the economy slows down, but still it will perform much better than other companies, like like some sort of a tech company which will see a very big drawdown when the economy starts to perform badly. Okay, so I hope you guys understand if you need to apply in Vishal Mega Marts or not. Now, the second IPO that we're going to talk about is Sai Life Sciences, and this is a 3,000 crore IPO, out of which 950 crores will go to the company and the rest 2,000 crores will go to the promoters who are selling their stake. This will also open on December 11th and close on December 13th. So let's talk first of all if you should apply in this IPO for listing gains, and the answer as of now is no, because the gray market premium as of now is only 5%, which is too low to take the risk. So if somehow the gray market premium continues to climb and then the gray market premium goes up till 40% by the last day of the IPO, then you can definitely apply. But before that, don't think about applying from the listing gains perspective. But should you apply to this IPO from the investment purposes, then let's first of all look at what the company does. So Sai Life Sciences researches, develops and manufactures small molecule chemical entities. Basically, they make new molecules for other pharmaceutical companies. So they do innovation, right? Because if you look at pharmaceuticals, right, how do you make new products, right? You come up with new molecules which are much more effective for, you know, some sort of a disease or some sort of any sort of thing which you're trying to treat, right? So you come up with these new substances or new molecules which are much more effective for like much more effective basically, and are much more better for your body, for everything, right? So they do the job of, you know, inventing these new molecules for big pharmaceutical companies all over the globe, not just India. They have many clients from US, UK, Europe, and all that, from all those companies, even in Japan. So and these guys do that, and so they also have a very big extensive team of scientists who do this, and so they do this on a contract basis. They also manufacture these molecules for the pharmaceutical companies and all that stuff. So now this sector, right, if you see, and the company, the things that the company does, it is a bit of a hit or a miss thing. To be very honest, it is a bit of a hit or a miss thing, because, you know, when you're developing new things, you're not always going to get success, right? So sometimes the company might also go through a bit of a bad period and then again start to come up. So should you apply to this company? If you have a very strong view on the pharmaceutical sector of India, then you should think about investing in this company. And I'm also going to tell you again one more reason why it is a bit of a bad deal. But still, first of all, if you have a very strong view on the pharmaceutical sector of India, then think about investing in this company for the long term. But until then, if you don't have an idea of what this company, if you don't have a proper idea of what this company is into, then it is better to just stay away. You know, sometimes you don't need to put your money into specialized companies of which you don't understand the business model of. Okay, so now let's talk about the revenues, and I'm going to tell you again one more reason why this might be a bit of a bad deal for you. So if you see in FY22, the revenues were 897 crores and profit after tax was just 6 crores, less than 1% of net profit margin. And then in FY23, 1245 crores of revenue and just 10 crores of profit, again less than 1% revenue. And then in FY24, 1494 crores of profit, and then the profit after tax jumped to 82 crores. Now I tried to find any sort of like an exceptional item. Is it some sort of an exceptional gain which is just one time gain because of which they saw such a big jump, and I could not find that. So definitely looks like they had a very good business quarter or something, or they had a very good business year because of which they saw very good jump. So again, even if you take the latest numbers of FY24, and if you see those numbers, right, what you are seeing is the profit margin is very slim, right? 1500 crores of revenue and you're doing only 82 crores of profit, which is slightly higher than 5%, 5.5%, right? So that is another quirk which I have with the company, is that net profit margins are very low. Now again, I myself don't have a lot of experience in investing in companies like this, so I cannot tell you if this is a very a very very good metric, or are these numbers good or are these numbers bad. But what we can do is compare the other competitors that it has, like Divi's Laboratories, right? They have a return on net worth of 11.79%. This company has a return on net worth of 8.5%. And even other companies like Suven Pharmaceuticals, they have 14% return on net worth. And then Syngene International, which has 12% return on net worth. So all of these companies have higher return on net worth than this company. So this is something which is again a problematic thing for me. Another thing that you would see, PE is at 203. And just I mean, looking at the PE over here, it looks bad to me. Just, even if you think about just 203 PE, it looks like this PE, like, just think about it. It will take you 200 years to recover your money, just in terms of profit that the company is making, right? So this is something that is really, like, even just looking at the valuations, I would say don't apply. And yes, the company might again see a very rapid growth in its profit and net profit, because of which the PE might climb down rapidly. That can happen definitely. But I would say don't apply to this IPO if you really have a strong view on the pharmaceutical industry of India. Just stay away. Okay, so that is something. Now, so that is it for Sai Life Sciences. Now we will talk about one mobikwik solutions, and you would have heard the name mobikwik. This is again a payments UPI app, payment app, financial services app, right? You must have used mobikwik, right? And they are coming up with 572 crores of IPO, and all of this is fresh issue. So all of this money will go to the company, which is a good thing, because companies like mobikwik go through a lot of losses, and so they need good amount of money to stay afloat. And I'm going to talk about that in just a second, the revenues and profit, net loss, whatever that is. Okay, so this IPO is going to again come at December 11th, start from December 11th, and I'm sorry, close on December 13th. So should you apply to this IPO from the listing gains perspective? The answer looks like yes, because as of now, the listing gains is at 35%. If the listing gains even stays about 35%, leave 40%, even if the listing gain stays about 35%, you can think about investing in this IPO for listing gains. But if listing gains climb down from here, goes till 30%, 25%, don't think about investing, okay? By the end day of the IPO, which is December 13th, okay? So that is it. Now let's talk about what the company does. And you would already know that the company has like services such as, mobile recharge, electricity payment, bill payment, credit card bill payment, and all that stuff. Just look at what Paytm does, and the company is pretty much the same, right? Then they also provide provide like offline purchase solutions like Paytm does, right? They have QR codes with at offline shops and all that stuff. mobikwik also has that. Then they also have the UPI services, like you would be familiar, right? All of the UPI services. And then they can they have some other stuff also, but I hope you get what the gist of the company is. You're pretty much familiar with what the company does, right? So now let's look at the revenues of the company. If you see over here, in FY22, revenue was 543 crores. In FY23, it jumped to 560 crores, and in FY24, it jumped to 890 crores. So a good growth after FY23. And at the same time, if you see, the net loss has been decreasing and has actually turned into a net profit. And so if you see, in FY22, net loss was of 128 crores. It decreased to 83 crores in FY23, and in FY24 the company turned profitable and made a profit of 14 crores. Now in the first half of this year, actually not in the first half, but in the first quarter of this year, of this financial year, which was till 30th June, they have made a loss of 6 crores, but again, not a big loss at all. So it looks like the company is now finally turning profitable. Like Paytm also, if you see, they turned a bit profitable in the last few quarters. And revenue also has grown pretty considerably. In one quarter itself, they've done 345 crores of revenue. So probably you can expect them, if you annualize just that number, you can expect them to do 1200 crores of revenue in FY25, which is again a good thing, indicating good growth for the company. But if you look at the PE of the company, and even if you look at the PE of not just this company, but PE of other companies like Paytm also, right? They have very high PE ratios, right? Given the amount of money that they're making right now. So what I would say is that you might face big drawdowns if you are investing in this company, right? The company definitely has a solid fundamental business in itself. They are trying to improve profitability, which you can also see in the revenues and in the trends, in the net profit trends. But what it happens with these companies, which you must have also seen with Paytm, is that people lose 80% of their wealth, right? People lost 80% of their wealth in Paytm IPO, who had applied in Paytm IPO, and they still haven't recovered their money. So I have something of that fear in, not fear in me. I didn't apply for Paytm. I knew it was trash at 1980 rupees, but something like this can also very well happen with the company, like with a company like this, when they are just turning profitable. When you're just turning profitable, having very high a valuation can mean that you can suffer a very big drawdown, because uh, you know w- it can mean that you can suffer a very big drawdown before the price again reaches at your buying price, which might be your IPO price. So what I would say is that if you can invest in this company in a dip, right? The IPO price is 265 to 279, which means you will buy the shares at 279 rupees only. So if you get these shares somewhere near 150, 200 rupees, then it is a much better deal in my opinion. And I think if you can just, if you have the capacity of just, like applying in this IPO, getting these shares and just keeping them in your demand for years, then think about investing in this company. But if you cannot handle a big drawdown in your investment, then I would say just wait for it and let the price come down a bit. If the price doesn't come down a bit, no problem. Markets are cyclical, and one day or another you will see the prices come down of a share which has gone up so much. The price, there will be correction in the share price, and then you can buy it. So in my opinion, I think if you cannot handle a very big drawdown, it is better to stay on the sidelines, or else you can just apply for the listing gains. But yeah, if you want to invest, if you can handle a big drawdown, invest. Or if you cannot handle a big drawdown, wait on the sidelines. Once you get the shares near 200 rupees, 150 rupees, then start to accumulate. So I hope you guys understand what you have to do. So these are the three IPOs that are coming next week. Now we have one more IPO, Adventurous Knowledge Solutions, but we will talk about that in the next week, because the IPO will be still open in the week after this, so you will still have the time for that. And again, the IPO section already is pretty big. Now let's move on to the market analysis for the next week. Now talking about the market analysis for the next week, if you see Bank Nifty over here moving up 3% and Nifty moving up over here 2.2%. As I said, if the markets have to move down, they will move down very fast, or we will see a move on the upside. Either ways, we will see a good move this week. And if you see in Nifty also over here, from Monday itself, market continued to move up, and Bank Nifty also showing very good move, right? If you see over here on Monday, Bank Nifty managed to hold on, also gave a fake breakdown over here, and if you see, then saw a very good move. Our target of 53,000 hit in Bank Nifty, and our target of 24,800 also hit in Nifty. So I hope you guys made some money. Even if you did not, no problem. We always have the market open for the next day, right? So what can you do for the next week? If you see over here, Bank Nifty has now broken this resistance, right? Which was of, let's say, 53,200 to 53,000, right? Now two things can happen. Either the market will reverse very fast from here and you will see a sell off all the way down till 52,000, right? Or the market will hold itself over here, or maybe in a bit of a broad range of 52,500 to 53,500, and then start to move up and try to attempt to go up till 55,000. And I'm talking about Bank Nifty over here. Now that is for Bank Nifty. For Nifty, if you see over here, Nifty has come back to its breakdown level. If you see in the daily charts, this is from where the markets broke down from this head and shoulders pattern that they made, and the market is exactly at that breakdown point. Now again, two things can happen over here. If the market really is very bearish, right, this will just be a pullback and markets will then start to go down and probably make a new low also over here. But that confirmation, where will we get it? Below 24,300. 24,300 now will act as a very crucial level, and for two reasons that will act as a crucial level. Now I'm going to delete this level and I'm going to make another level over here which is going to be important, and that is 24,300 to 350, you can say. uh yeah, this level. Why? Because markets, if you see, have broken out over here from this, you can say again like an inverted head and shoulders pattern, sort of. Not completely perfect, but you can get the idea, right? So this is the breakout level. Now a lot of buyers would have entered at this breakout level. So if Nifty goes below this level, that means all of these buyers will get trapped, and chances are that Nifty might again see a sell off and probably make a new low also over here. So what you need to do over here is very simple. Only look at 24,300. If we continue to stay about 24,300, chances are Nifty might go up till 25,200 also in the short term. Okay. But if we break 24,300, especially with strength, then we can probably see market moving down till again at least first of all this low of 23,400, and then a new low also easily. Markets can also make a new low easily and go down till 22,800 over here. So all you need to do right now is look at what is the market doing in the next few days, and right now probably chances are that market will try to decide if it has to go up or if it has to go down. So don't try to you can say predict the market's direction very fast over here. Let the market take its time and let the market decide where it wants to go, and then you go with the flow of the market. Okay. So for Nifty, 24,300 will be the important level. On the upside, if we however continue to sustain about 24,800, then we have 400 points of move on the upside, 400 to you can say 500 points of movement on the upside, after which again markets can take a bit of a resistance and consolidate over here. So for Nifty, things are not completely bullish, and it does not look like Nifty might hit a new all-time high. But for Bank Nifty over here, if you see, Bank Nifty can definitely hit a all-time high. And so if Bank Nifty has to hit a all-time high, what it will do is it will not try to attempt to hit a all-time high, probably, like in one go over here. Yes, that might happen, but what is a more probable scenario is that, just a second. Yeah, what is a more probable scenario is that Bank Nifty might consolidate over here and then, sorry, just a second. Yes, Bank Nifty might consolidate over here for a couple of days and then try to break out and go above 55,000. Not a couple of days, for a few days, and then try to go up till 55,000. Because what this will enable is that this will give the market a little bit of rest at higher levels, and this will indicate that the sellers are not willing to sell very aggressively over here. And then what can happen is that markets can consolidate over here and then start to move up and go up till 55,000. So if Bank Nifty is sustaining above 53,000 and continuing to consolidate, then this is a bullish sign for Bank Nifty. If Bank Nifty goes below 52,500 again, which is this breakout level, and closes bearishly, in a bearish way below 52,500, then chances are Bank Nifty might also see a very big sell-off. Easily you can get 2,500 points, or even like not 2,500, but easily you can get a 3,000 point fall over here, from over here till till this lower levels over here. So almost 3,000 points of fall you can get in Bank Nifty also. So all you need to do now is look at what the market is doing in the next few days, the next 3 to 4 days. Is the market consolidating at higher levels, or is the market again going to or is the market again showing signs of good sell off? And by good sell off, I mean a sell off like this, right? In Nifty also, a sell off like this, we need big red candles, and then we can consider that as a good sell off, right? So I hope you guys understand what you have to do for the next week, and I hope you guys understand how you have to decide the direction of the market for the next week. So yeah guys, that was it for this week, and thank you very much for watching till the end. I hope you guys learned something new from this episode. I hope you guys enjoyed this episode. But yeah, if you do have any suggestions for the podcast, if you want something changed, if you want something new to be added to the podcast, some new things that you want to get, that you want to discuss, that you want me to discuss, do let me know in the comments, and I will make sure that I try to do my best. But yeah, I'll see you guys in another video in another week. Bye bye.